Hi there, welcome to Neppy Invest. I do prefer to look at the enterprise value of a company to see how highly or lowly they are valued. A lot of investors tend to look at market cap, but when you just look at market cap, that doesn't tell you the whole picture. And the company I'll be discussing today and looking at their March quarter Appendix 4C will show you why it's better to look at the enterprise value of the company instead of the market cap. And that company is Threat Protect. So before we get into a discussion of market cap versus enterprise value and looking at Threat Protect's Appendix 4C, just a few facts in terms of this company. Threat Protect are involved in security monitoring and solutions. Some things they do include monitored security systems. So they're the company who might monitor your security system at home, security personnel, and corporate risk consultancy. The ticker code is TPS, market cap of 6 million. So when you compare that to the revenue of 26.3 million, and for the fact they were operational cash flow positive, albeit on the low side of 200,000, you might think this company is dirt cheap. But this doesn't really show you the whole picture of the company, and you'll be able to see that in the next few slides. So let's have a look at the March quarter Appendix 4C and why, even though the company's market cap is only $6 million, it's a little bit more expensive than that. In most Appendix 4C videos, I usually only show section 1 of the consolidated statement of cash flows, and that is the most important section in my opinion. It's not the only section, but it's the most important because that's where you see how the company is performing in their operations. For Threat Protect, they did receive $6.6 million in receipts for the March quarter. That is a little bit disappointing on the low side. I would rather that to be a little bit higher. The most important thing is found right down the bottom, and that tells you whether the company is operational cash flow positive or negative. And Threat Protect were positive in their operations by 465,000. So that is one slight positive. But there is something that does stand out here, may not stand out to you, but interest and other costs of finance paid was actually 665,000. So straight away, that tells me there might be a little bit of debt in this company. And even though they were operational cash flow positive for the quarter, they did lose $400,000 of cash and finished the quarter with $2 million. In an Appendix 4C, there's about eight sections or so. And most of the sections I do skip through quite quickly because a lot of times there's nothing in there. Always look at section 1. And I'll always go to section 7, have a quick look to see if there's any significant numbers here, because this section, the financing facilities, tells you what borrowings or loans a company has. And Threat Protect really stands out because they have $50.4 million of loans. The other really interesting thing about this section, it does tell you the particular features of these loans. For instance, the number one loan, which is $34.2 million, are secured notes issued by Soliton Capital Partners, maturing the 29th of April 2022, so less than 1 year from now. It has a current interest rate of 10.56% per annum. So even though we are in interest or low interest rate environment, a lot of these small companies do have these loans that have significantly high interest rates, and this is $34.2 million. Have other loans as well, unsecured note issued by First Samuel Limited, maturing 28th of February 2022, interest rate of 6.52%, and an unsecured convertible note deed with Black Crane Asia Opportunities Fund to the value of 6.5 million at only interest rate of 5%, interest rate maturing 15th of April 2023. Black Crane is also a significant shareholder of Threat Protect. So they have $50.4 million of loan, only $2 million of cash. So that means their enterprise value is $54 million. So that's quite a bit higher than the market cap of $6 million. So that gives you a true picture of how you need to value this company. It's not $6 million via the market cap, it's $54 million via the enterprise value. So you've got to take into account the debt the company has on its books. The final thing I just want to say is a lot of people do make reference to balance sheets of companies. You'll say it's a very healthy balance sheet. So in those situations, you're looking for a company with lots of cash and no debt, When you see a company with very little debt and very little cash and a lot of debt, that's what I refer to as an unhealthy balance sheet. So Threat Protect does have a woeful balance sheet right now, but they do mention in their growth strategy how they are focused on leveraging the largely fixed cost infrastructure and significant capacity of its security control room through acquisitions of monitored security client bases. So they are continually doing acquisitions to build up their client base, and it seems like this is a part of their strategy to build up their debt, because I do believe in the next few years they'll start to bring in a lot of cash coming through their business. We'll see if that does come to fruition. I'm a little bit skeptical right now. I think the market is as well. Now on to the receipts history for Threat Protect. This is something I love to do. I can't find this anywhere else. So if you do know of any other place, any other organization that does this, that looks at the receipts history for a company, looking at the quarterly cash flow, not half-yearly or yearly cash flow, I would love to see that. We do have history going back to October 2015, and from October 2015 to the COVID-19 financial panic, Threat Protect were growing their receipts at a good, healthy rate. In fact, they grew them from $1.2 million in October 2015 to a high of $7.7 million in the start of 2020. But ever since that high of $7.7 million, we've started to see receipts dip off. And the most recent, the March quarter receipts were $6.6 million, which was significantly lower than last 6 quarters. Hopefully this is a little blip on their future growth in receipts. Hopefully it's a one-off. So I think the next quarter, the June quarter, is going to be very important for Threat Protect. Last thing we'll look at is some charts for Threat Protect. The first chart we'll look at is the 5-year weekly chart. Nothing to get excited here at all. In fact, the share price has been in a long-term downtrend for the last 2 years, moving from 17 cents to a current share price of 3 cents. Not a lot of volume either. The market is not interested in this company. So what you want to do is just wait for signs that the company's management is able to deal with their debt, grow their operational cash flow, so become more positive so they can pay off their debt, and also do some acquisitions so they can grow for the future. So until they're able to prove they can do all those things, I think the market is staying well clear of this company, just like I am. And when we look at the 1-year daily chart, you can just see how illiquidly traded this company is. The candlestick chart looks very lumpy. No, it's not smooth. This is exactly the sort of chart you would find with a company that doesn't trade that often. And in fact, on the 3rd of June, the share price rose 25%. You might think, wow, what a significant rise in share price. Went from 2.4 cents to 3 cents on about 3 or 4 trades. So there wasn't a lot of activity, but still the share price rose 25%. So at this point in time, the very fact that the share price is in a long-term downtrend, it's illiquidly traded. If you do take a position, it'll be hard to get out of unless you maybe sell at a loss. No reason to buy into this company at all. Unless you were a long-term buy and hold investor and you think share price of between 2.5 cents and 3 cents is fairly cheap for this company, market cap of 6 million, and if the company can deal with their debt and continue to grow for the future and become consistently operational cash flow positive, maybe you think in 5 to 10 years this company will be significantly larger than it is now. That's the only reason you might think of taking a position at these prices. And that is all I've got for this Appendix 4C video for Threat Protect. If you have any questions about this company or any other company on the ASX, I will gladly answer anything or reply to any comment you have to say. Last thing I should mention is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. See ya.